what really brought people down was they did not buy opportunities that provided forced appreciation, and they did not buy opportunities that, the cap rate exceeded the interest rate, right? Like I did all of that. Like I bought, 5 to 20 unit properties at a 20 to 30% discount with value to create. So there's equity built in, right? And simultaneously, I'm buying at an 8, 9, 10 cap rate while I'm borrowing at a 5 or a 6. Right. So there's just so much delta in there for I can mess up all day and this deal still makes sense. Right.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Andrew Freed, went from corporate to real estate, and after reading Rich Dad, Poor Dad, used the HELOC to get into investing. He currently manages 500 plus rentals and owns 550 plus units through a combination of house hacking, syndication, and accessing liquidity through lines of credit. He's also a realtor specializing in multifamily in Worcester, Massachusetts. He's helped buyers house hack and start their own investing journey. You can find him at freedommanagement.net. Andrew, thanks for taking the time today.
I am excited to be here. Thank you for having me.
Now, for those who are not familiar and are tuning in, where is Worcester, Massachusetts, for those who are totally unfamiliar? And then also, what's the market like out there in Worcester?
Great question. Worcester is actually the second largest city in New England, second to Boston, and it's 45 minutes west of Boston. What's fantastic about Worcester, and the reason why I love it, is first of all, it's a mecca when it comes to multifamily investing. 30 to 40% of the housing stock are small multis, ranging between 2 and 20 unit properties. So fantastic for multifamily investing. Additionally, it's like at the epicenter of New England in general. Logistically, it's very easy to get to. It's right, 45 minutes an hour from Nashua, from Manchester, from Hartford, Providence, Boston, Lowell, Massachusetts. The list goes on and on and on, right? And it's more or less a direct artery to New York City. So there's so many reasons why I love Worcester in general. And the difference between Worcester and Boston is Worcester probably operates between a 6.5 and 8 cap rate. Boston probably operates between a 3 to 5, maybe, right? So it's definitely more of a cash flow heavy play.
Now, getting into multifamily investing, was this something where you had mentors in the space? Was this something where, family or friends was coming from that space, or was this a leap of faith for you?
So I was, like many of your audience, I was just a typical W-2 worker, got sold the American dream, got sold get a good education, get your bachelor's, get your master's, get a nice 6-figure salary at a prestigious organization, get a condo in the city. Like I did it all. And by the end of my 20s, I felt completely empty. And I felt like I had so much more potential to put on the table, right? And then I found this beautiful book, Rich Dad, Poor Dad, and it kind of opened my eyes to the way I viewed money. Previously, I was very averse to debt, and reading Rich Dad, Poor Dad, I understand how to utilize debt to build assets, right? And that's kind of what led my journey into real estate investing that happened during COVID.
And so walk me through, those first couple of deals. Was that first deal, single family deal? I know a lot of people may start small, but I've also talked to people who their first deal is 20 doors.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
Totally. So I highly recommend this for anybody who wants to get into real estate investing. And many big players got started this way. For instance, Grant Cardone, Anthony Turner, house hacking, right? So my first play into real estate investing is, I bought a condo. I had it for 5 or 6 years. I lived in Boston, and my condo appreciated over time. I had about $200,000 of equity in that condo. So what did I do? I got a line of credit, a HELOC for about $200,000, borrowing at, 3 or 4%. And I utilized that money to start house hacking properties, owner occupying 3 to 4 unit properties with an FHA loan, 3.5% down, or a 5% down conventional loan.
Now, when you were in the process of house hacking, was this something where you were doing this very gradually and like, hey, I'm going to add, one a year, or did this scale up rapidly in the first year and you were thinking this is going to be, my new full-time passion and career, really?
Totally. So, while doing my real estate journey, my entire vision was building it simultaneously doing my W-2. So my initial vision going into this was I wanted to house hack 10 multis in 10 years, 10 three families, have 30 units right off into the wind. That was more or less my thesis going into real estate investing. As I got into it, as I got more experience, it definitely changed over time. But for my first, I think 2.5 years, I went from 0 to 24 doors. And then from year 2 to 5, I went from 24 to 500. So there were definitely different dynamics I took at different journeys of my real estate endeavor.
So 25 to 500. Let's go through that because, of course, that's
Okay.
exponential growth. Was there a mindset shift? Did you say, this is something that I'm really passionate about? Was there just opportunity that you saw? Did you, work with syndicators who showed you a way forward through
Totally.
raising capital?
Yep. Those are all valid and good questions, right? And where it all really started for me was it started with finding a mentor, right? I found somebody in my market who owned hundreds and hundreds and hundreds of rental units. I found a way to provide them value in the form of becoming an agent on their agent team. Even though I had a strong W-2, I became an agent and got commissions just so I could provide them value. I started a meetup under their brand. Right. I did so many things to provide them value. And then when I started getting deals under contract, I started having questions and I called this person. They suddenly picked up my call because I was obviously making them a ton of money. Right. So that's how I started. I found a mentor with hundreds and hundreds and hundreds of rental units. And then at that point, I started building a brand, started going on YouTube, started going on podcasts. I ended up getting on the Bigger Pockets podcast. And right when that happened, somebody brought me a 69 unit syndication portfolio that I syndicated. And that kind of started my journey into raising capital and taking down larger deals.
Now, I've seen this from afar, outside looking in, from about 2014. So this would have been before you were in, but 2014 to 2020, it almost felt like you couldn't buy a multifamily deal wrong in most of the country. And then 2020 to today, really, and we're maybe seeing a shifting of the tide right now.
Yep.
It's been trickier for syndicators. I've also heard that, investing in the Massachusetts and New England markets has been different, maybe hasn't been affected so much. But I think generally across the board, it's not been the easiest 5 years for syndicators in general. Have you felt any of those pressures, or have you seen that affecting other syndicators up there as well?
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
I have definitely seen it affect syndicators, but I would definitely say I've seen it in markets that are oversaturated, right? The Sunbelt, right? Like every syndicator over the sun wants to invest in the Sunbelt. And as a result, it's completely oversaturated, right? As opposed to New England, there's probably 4 or 5 syndicators, maybe 10 syndicators in the entire market. And I know every single one, right? Like people don't syndicate in my market because they just simply don't know how to operate. And I think there's a huge false belief that New England is a bad market to invest in. Like, please keep thinking that and let me keep buying all the real estate I possibly can, right? And I'll just tell you a couple reasons on why New England in general is a fantastic market to syndicate. First of all, it's completely um insulated, right? Like in New England, the population growth is definitely steady. We have so many strong institutions that will be here forever. MIT, Harvard. We have a very strong healthcare, very strong biotech. But not only that, we have extremely high rents, right? So it's expensive. Don't get me wrong, but the rents are high because the cost of living so high. So there's a multitude of reasons why I love New England in general to invest in.
Yeah, I mean, you mentioned a bunch of things that I think are very relevant to investors who are investing in those,
Hmm.
Sunbelt states.
Yep.
There's this idea that, it's not going to be favorable to investors, that, it's difficult to be a landlord and so on and so forth. But at the same point in time, you can, and I don't know this personally, but I think I can say this having spoken with a lot of investors. You can bank more heavily on appreciation. You can bank more heavily on low vacancies that you're not going to have to, uh, give away so much to attract tenants. I mean, that's happening right now in so
Totally.
many markets in the country, which is unbelievable. Because if you go just back a couple short years, it was like every market that you were in, if you were a
Yeah.
renter, you needed to do first, last,
Totally.
finder's fee, broker's fee, some other
Yeah.
security deposit. And now in some markets, including the one that I'm active in Texas, people are getting like a free month of rent, a
Yeah.
$500 gift card, right?
You bring up a great point, and I think a big thing about that is how easy is it to build, right? In Texas, you can build a skyscraper with very few permits, right? New England, you need a mountain of permits. It's extremely hard to build properties, but as a result, the existing housing stock is in high demand, right? And there's a housing shortage, right? And combined with that, New England actually has some of the strongest Section 8 programs in the nation. 30 to 40% in my rentals alone are Section 8, and they pay extremely well. So I think New England has a lot going for it. But just going back to your original point,
Yeah. I mean, hey, if the properties are going to appreciate like that and, if they cash flow so heavily, it does in effect give you a little bit of cushion in a way where people might not see that. I do want to pivot a bit here though, Andrew, and ask you about the single family space. And we have a lot of flippers who listen to this show. It's hasn't been the easiest couple of years for flippers, but we may start to see that coming back. I also know that there's a lot of people who are very much looking at the burr strategy right
Mhm.
now. Um, are these strategies, fix and flip and burr, are these viable strategies right now in markets in Massachusetts or in Worcester?
So, I mean, full disclosure, I think I have 5 active flips going on personally. So I've experienced this firsthand, right? And, especially, I'm only talking about my market, right? New England specifically, there are 2 markets, right? There's multifamily and then there's condos and singles, right? The condos and singles are trading extremely slow right now. I would, if you're in New England right now, if you're in Massachusetts, I would not recommend you flip because it's just, the holding cost will kill you, and buyers are extremely picky. They have a plethora of options. But if you're considering flipping a 2 to 4 unit property, I absolutely recommend that for a multitude of reasons. First of all, they would sell, right? But second of all, you have an exit strategy, right? You could always refinance it, toss a renter in there, and keep a rental, right? So that would be my advice for people in my market regarding whether they want to flip or not. Yeah.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Now, when we talk specifically about getting started in multifamily investing, I think a lot of people might say, "Well, I'd rather get started." I shouldn't say
Sure.
most people, but there's a lot of people that would say, "Well, let me do a flip. Let me
Yeah.
work with smaller number of doors." Or they might say, "Let me cut my teeth in a smaller unit size until I build up. But
Sure.
I've also heard the approach where you should partner with someone. If you're going to be, managing 5 rental properties, it's the same amount of work as, managing, 20. And I've heard,
Mhm.
20 is the same amount as 50. And so I think a lot of people might get maybe some mixed messaging as far as where's the right place for them to start. Do they partner? Do they do it by themselves? Do they partner for capital? Do they partner for experience? What's your perspective for folks who may be just getting started on, how many doors they should acquire, what, segment of real estate they should be looking at, and then, do they take on partners?
That's a lot, a lot of questions in one. I will definitely do my best. So I think your first part of your question is, should they take on partners, right? I personally think, before getting started at any investing, you definitely have to put your money where your mouth is, right? And get a couple pilot studies under your belt, couple investments under your belt before you even consider taking other people's money, right? Would be number one, right? That's by far number one. Number two is you really have to do an analysis of how much time you have available versus what kind of return you want, right? Because if you're working a full-time W-2 and you think flipping is realistic, like that's a full-time job. That's going to take hours and hours and hours of time. Yeah, maybe it provides you a 20 to 30% annualized return, but it's a full-time freaking job, right? Meanwhile, if you're working a W-2 and you don't have a lot of time, multifamily investing might offer a low return, but it offers you the time to actually be successful in that investment, right? Or maybe you have a lot of time, right? Maybe you want to focus on short-term rentals because that does require a lot of time, but it has a higher return. So I think you have to understand your situation. At the end of the day, just like any attorney, I think my answer is it depends, right? Like, what is your specific scenario? And I can definitely lead you down the right path. But ultimately, I think it all comes down to just like the low hanging fruit is simply just, house hack a property. It could even be a single family with a bunch of bedrooms, right? It's very low cost. You're talking 3.5%, 5% down, super low risk. You're literally on the property acting as a property manager. And it's literally real estate investing in training wheels. You're literally like on site learning how to be a PM, day in and day out. You're literally living there, right? It's unavoidable. So that
Yeah.
would be my advice to get started. And obviously, just going back to one of your questions as well, is it one door versus 20 versus 30? You're absolutely right. Like once you get big enough, the work to close a 3 unit versus a 20 unit is not that much different, right? But I absolutely recommend if you're investing in real estate, you should take an acclimation approach, right? You got to take something easy and then slightly harder, slightly harder, slightly harder. Don't go to the 50 unit first, take on a 3 unit, then take on a 5 unit, then take on a 10 unit and slowly build your way up in difficulty.
Yeah. I mean, when we talk about which segment to get started in, I've also heard people tell me, you got to go to something which you're going to be comfortable with, that's going to be good for you and your schedule, and that you're also going to be passionate about. Someone told me, if you're doing short term rentals, do you enjoy being a host? Do you
Yes.
enjoy messaging people? Because
Yep.
that's going to be part of it. And
Sure.
if that's going to bug you to receive a late night message
Yep.
about, some concierge
Hmm.
service that you have at the B&B, that could be an issue. So it is time dependent. It's what you're passionate about and so forth. We are coming up on time here, though, Andrew. Any new projects that you're working on? And then as well, what's the best way for folks to get in contact with you or your team?
So I'm actually doing a syndication fund, the Path to Freedom Fund, and I'm purchasing about 10 to $15 million of value add real estate in the New England market. I think we have like 60 or 70 doors already owned under that fund. So just building that fund, it's going to be a fun endeavor. It's kind of what I'm working on right now. If people want to learn more about me, they can find me at Investor Freed on Instagram or Andrew Freed on LinkedIn or Facebook. And definitely check out my podcast, the Freedom Real Estate Podcast, as well. Yeah, appreciate you having me here.
Andrew, thanks so much for coming on. Thanks for your time.
Thank you.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.